Hello guys, welcome back to another live execution video. Today is the 26th of October and today I'll be trading GbpUsd and I'll be taking a sell trade. This is London session, so the pink shaded area is a bearish order block on the 1 hour time frame. And buy side liquidity has been taken, and I've also marked out the midpoint of the order block, which is called the mean threshold. Just checking out what's going on in euro as well. It's in a 1 hour fair value gap. The black dashed line is the consequent encroachment. But anyway, I took my trade on GU and not EU. So I'm waiting for displacement lower with a fair value gap. And I will execute if price returns to the fair value gap. Would be nice to see price break through that blue level for a nice shift in market structure. Nice displacement. Marking out the fair value gap. Waiting for price to return to it before executing. There it is. I take my trade. But this time round, I choose to place my stop loss above the order block, not above the recent swing high. Because within the order block, there is still a possibility for price to make a higher high. There's nothing wrong in having a wide stop loss. It just means that you want to give the market enough room to breathe. And at times, whenever you have a tight stop loss, you can be taken out, you can be stopped out, not because you were wrong, but because you didn't give the market enough room to fluctuate and to move around. So price immediately went against me. And the reason it did that was because it was seeking liquidity above those recent highs. And after taking out that liquidity, then it began to drop aggressively. That's a nice displacement leg. My target profit is on that level where I've marked potential draw on liquidity, which is Asia's low. So I'm anticipating that price is gonna get there. So that fair value gap gives an opportunity for a second entry, but I'm not gonna execute and take an extra trade. I wouldn't be surprised if price went back up to that fair value gap. Price tags that fair value gap. Waiting to see how it will react from there. Looks like a beautiful reaction from that level. I'd love to see it break those recent lows. Price tapping that fair value gap again. And you need to understand that imbalances, inefficiencies of fair value gaps are magnetic to price. So that's why price always returns to these levels. The market working those levels. Not sure whether, alright, there it is. That fair value gap is fully filled. And immediately it does that, it drops aggressively again. Marking out another smaller fair value gap. Market goes back into that imbalance, taps that level again, taps it a third time, and reacts from that level very nicely. Now these are the kind of moves that we traders like to see. Stop loss moved to break even now. My TP remains. And we all know how the market is. It never moves in a straight line. We always have impulses and corrections. So of course I'm expecting that the market will correct itself after that aggressive move down. Taps that fair value gap again. But if you look to the left, there is a significant swing low, and price has already traded below that low. So there's still a possibility for the market to go back up, but I'm still holding my bias that it will get to that draw on liquidity that I had initially pointed out. So the market here just began to consolidate. And at this point, I wasn't sure whether I should keep holding the trade or I should just take profit, because it began to show signs of going back up. But my idea was that if the market closes above that fair value gap, above current market price, then I close the trade. Digging deeper into that imbalance, alright, at this point I was convinced that I should exit, and I exited the trade with a small profit. A win is a win. Thank you so much guys for watching this video. Kindly subscribe. I will see you in the next one.